let's break down my day today trading in the stock market. This is going to be my daily market recap, which I'm going to start doing every day of the trading week. Hopefully you guys will be able to tune in every day, figure out, well, how I'm trading, learn how to trade based off of the breakdowns that I do, and get some insight on what might potentially offer some opportunity in the next day's trading sessions. Well, today was a good day. It was a green day. One trade specifically that I do want to talk about was ticker symbol BSX, which I was able to make about 43% on. That was a total net P&L of $582 or 43%. So I only had just about $1,300 in this trade in order to make that net P&L. So you don't need a ton of money to see worthwhile returns in the market. And throughout this, we'll call it series, I'm going to show you that. Now, what I really liked here was, well, one, my timing from the entry perspective to being able to hold this trade and capitalize on a max profit. I did a great job at that to let this trade essentially run into my take profit. So let's pull up my software, and this trade specifically on ticker symbol BSX came through at 314. These were the BSX calls. The strike was 107. These were the 919.25s, and they came through at $104.43. That was the current share price of BSX. Now, if we look at our BSX chart here, well, one thing we want to note is coming into today's session off the open, this was our first 30-minute candle we saw across here of our MAs. Now, this let us know that we went from horizontal to vertical. And what we know is that markets will trade in vertical 15% of the time, and they will trade in horizontal 85% of the time. So that 15% was this first hour, just about hour and a half, where then we moved back into horizontal for the rest of today's session. So definitely would have wanted to avoid trading BSX. During that first hour and a half, we saw a reversion off our mean to, well, first our further band to the upside here, our golden band, and then back down here to our furthest outer band, that blue band. These are our bars we're using on a 10-minute time frame. So we use the analogy a lot. The tide goes in, the tide goes out. What do we know happens regardless? If the tide's in, if the tide's out, we know in order to go from high tide to low tide, back from low tide to high tide, we have to come back to our midpoint, our mid tide, or our mean. So we could see here how we, again, reverted away from our mean, spent a lot of today's session trading on the bottom side, okay, below our 8-day EMA, that blue line in the middle there. The trend on the day was very bearish, right? We could clearly see that here. We've got our middle VWAP, or what I'll refer to a lot of the time as our mid tide. And after seeing a pretty strong rejection off the open, this was our opening price here at 108 on BSX. Very strong rejection, rejected to our low tide or our bottom VWAP, bounced back up to our mid tide. Saw a rejection here, back down to our bottom VWAP, sold off further, reverted. Okay, at this point, keep an eye on the time here, reverted back up to our middle VWAP, started trading slightly below, tried to break back over, traded on, slightly broke back above, was rejected again. Sellers pushed this thing down back to our bottom VWAP. So we're in this pretty steady downtrend throughout the day. We could see MACD supporting that same story. And the opportunity here to decide to step in and take a long position on a very bearish stock, obviously, well, one was accompanied by the order that came through on my software. I knew in the first place to look at BSX to get in those BSX calls, but it was further validated, and I took the trade because of what I saw here from a technical perspective. Okay, and what was that? Well, that was a low at 103.69. If we look at 103.69, we started to see a bit of buying, right? Buyers started to step in, not too aggressively, but what became very apparent was that this 103.69 more than likely would be our low of day. Because if we look at our bars here, and if we look at our envelope system, well, we had traded down during the first, again, hour and a half, hour to hour and a half of open. We had traded down to our further outmost band here, our blue band. Those bars did chart lows below this blue band. Traded back up to our mean, our 8-day EMA, traded back down to our purple band. So we traded on a lesser band. We actually charted a lower bar. And that's something to really pay attention to when we're looking to validate true lower lows or true higher highs. We want to see whether or not price, if it indeed is forming true lower lows, is forming those lower lows on lower bands. And what we saw was that throughout the day, and especially here at 103.69, we formed our lowest bar of the day. Okay, our share price was the lowest point at which BSX traded during the day. And that share price was formed on our purple band. So keep in mind, again, when we went into vertical here off of the open, we broke pretty far below our blue band. So here is where we made a lower low on a higher band. This was not a true low because we would have had to have seen this low at 103.69 form a bar below our blue band. But what it did was it formed a bar on our purple band. At that point, we saw a quick reversion up to our mean at 1330 right here. Yes, we didn't chart up all the way to our middle VWAP because at this point we had traded pretty far off of it, but we did trade back up to our 8-day EMA. What we then saw was another retracement, but we then were able to hold our green band, pulled back up into our pushback. We then pushed back up into our red band, started trading along our red band. So this was a very clear reversal. And at this point, at just about 250, we could see how we were steadily trading, I would say, along our red band, reverting back to our 8-day EMA or our mean. This was our shift in tide, if you will. And this gave us that signal of a potential reversal. The MACD came very close here, but did not cross. We saw volume remained, I would say, relatively low, but speeds did start to increase. Okay, we started diverging farther apart on the MACD, and that was just a really solid confirmation that this was a place where we could step in, because if we look back at our lowest point of the day, if you're taking into account not actual share price, but taking into account our envelope system, we did trade far outside of our bottom blue band. So what was the assumption here? Traded back up to our mean. Well, let's play a move back up to high tide. So our top further outmost blue band. So that low tide back to mid tide, low tide, mid tide, low tide, mid tide, low tide. This was not a true low. Back to mid tide, saw that sign of a reversal. Looking at all of our indicators here, hopped into those BSX calls, rode this thing back up to our high tide, right into the close. We were able to capitalize on just about 43% profit, right? It was a beautiful trade where we were able to use these tools we have to not only get this amazing entry, right, but to hold this thing and ride that momentum up right into the close. Okay, I could have sold here, I could have sold here, but I sold at the most ideal time possible. That fill price was also the highest price those contracts traded at, aside from our open. So 102 fill, average entry was at 70. So if we look at where the market was at heading into the open, we obviously formed these record highs, these all-time highs at $654.80 on SPY. Coming into the open, we were balanced, okay? We were trading on our mean throughout the entire day. You can see it was a pretty calm day from, I guess, just the recent volatility. If we want to take into account what the market's kind of looked like over the last couple of months, this has definitely been one of the more chill sessions, if we want to put it that way, right? Where we just traded around our mean. We traded back into our mean pretty much throughout the entire session, little flush into the close. I want to also note that timing SPY. So when we got into those BSX calls, we also played that bounce on SPY perfectly. So we did have SPY to kind of help us out there. Now, not all stocks are going to trade alongside the overall market or alongside SPY. You know, most will, or the majority, over half definitely will. But as SPY was just simply trading on our mean throughout the entire day, you can see that 8-day EMA, we just continued trading back into, even as we did form lower lows on the day. The same thing could be said here on SPY, where that reversal was relatively easy to spot if we look at our indicators here. And I think going into tomorrow's session, again, I'm not a predictive trader, I'm a reactive trader. Going into tomorrow's session, you know, we don't know what's going to happen, but if we traded today in horizontal, if we traded the previous day, okay, Tuesday in horizontal, we traded Monday in horizontal, and our last vertical was really on Friday last week. I mean, we could expect a vertical move just based off of the probability there that we do go vertical, which again is going to be 15% of the time when we are going to be trading vertical, and that 85% of the time when we're trading horizontal, we're not going to want to trade or look at any reversion to the mean programs, because in vertical, we're not going to revert to our mean. So when the market is not balanced, we're not going to be reverting back to our mean, and it's just kind of hard to distinguish what is happening. Some days I'm going to look more prominently on the VWAP, on the MACD, on our volume, on my envelope system here, but we're always going to reference where we are at. Are we balanced or are we not balanced? Are we horizontal or are we vertical? And then we can really decide if, you know, we can kind of step in and take that trade. So I'm trading relatively small size here, and I want to show you that you do not need a lot of capital to see returns like this. I mean, right now, again, it's Wednesday. We're averaging about $500 a day this week. This is just Monday through Friday, about $1,500 so far on the week there, September 8th to September 10th. So again, that's an average daily P&L of $500. That's trading with about $1,300 per position. So I'm not coming in here, I'm not showing you, hey, I'm trading with 100,000. What I'm really focusing on is finding consistency at this smaller size and shooting for those higher percentage gains, which means holding our trades longer, trying to capitalize on those trending moves, not necessarily trending days, but trending moves. You know, I think this is one thing that I'm gonna really enjoy, which is going to be showing you guys more and trying to provide that transparency, because I just don't see it anywhere else online. I don't think I need to, like, I have put down big numbers this year. I mean, my best day was 45,000. I can trade big size. I am putting myself in a position where I want to trade this relatively newer system that I am, and instead of just trading big size, I'm trying to scale this size up. So starting out at an account size where, you know, it would be 10 to 15,000 in your account, and scaling this thing up beyond that from a position sizing perspective, and just from a risk adjusted return perspective. I want to make sure that we're keeping drawdowns relatively small, and we're seeing some good upside before we start getting a little more aggressive. But that was today's session. Subscribe for more. I'll put a link in the description to my mentorship if you want to trade live with me every single morning and have access to see and copy my trades. I'll see you guys tomorrow.